Ladies and gentlemen, Six Fig Stock Trader here from YouTube, folks. Today, we're going to be breaking down the charts, and I've got a very interesting video that involves foreign currencies and crypto. In this video, we're going to be talking about the correlation between Bitcoin, the crypto markets, and the US dollar index. Now, I've seen a lot of YouTubers really play around with the DXY on their charts, but they never really take the time to explain things. Now, the US dollar index is basically an index where we can measure the strength of the US dollar against 6 foreign currencies. We can measure it against the euro, Japanese yen, the pound sterling, the Canadian dollar, Swedish krona, and the Swiss franc. So that is what the DXY does. It measures the US dollar strength in comparison to those 6 currencies. So there's also a very sweet but toxic relationship between the DXY and cryptocurrencies. So when one goes up, basically the other one goes down, vice versa. Let's get into this. So welcome back to the channel, everyone. If you guys haven't already, feel free to follow me on Twitter. This is where I'm dropping charts, my latest land acquisitions, things I find crypto interesting. Just type in Six Fig Stock Trader at Real Six Fig. Let's get back to the charts. I'm going to do a quick little explainer here. We got Bitcoin on the left side. We've got the US dollar currency index, also known as the DXY. On the right side, both charts are 1 month, as you can see. Now, I thought it would be fun to just start right from the beginning of Bitcoin, so you guys can really bite down on how important this stuff is. By the way, if you find this video helpful or you like this content, please smash that like button. So when we had this peak of the Bitcoin crypto market rally back in December of 2013, again, this is on a monthly chart, we can look at what happened. Well, we had this amazing peak, and then we went into some sort of bear market. And what happened during this same time frame for the US dollar currency index? Well, we can see that the US dollar gained significant strength. And we can see that really the crypto market bottomed sometime August of 2015. So we went into almost a 1.5 year long bear market while the US dollar rampaged against all the foreign currencies that I just mentioned previously. So once August 15th rolled around, we had a very nice run up to about January 1st, somewhere in there, 2017, before things really took off. So let's kind of look at the charts during that time as well. So we can see that August 1st, somewhere right in here, to January 2017, the markets really kind of traded sideways. And so Bitcoin really didn't care at this point in time what the markets were doing as far as the US dollar strength was concerned. As long as it was just kind of trading sideways, Bitcoin continued to rally. And then we saw the value of the US dollar shoot up significantly and then start retracing. But we saw the value of the US dollar really start decreasing January 1st, 2017. And once this thing went into this little bear shed, we can see how price reacted as far as Bitcoin is concerned. We had this significant blow off top happen. And this ran from January 17 all the way to January 2018. So that was pretty interesting. And if we look at where January 2018 was, that was the peak of Bitcoin in the crypto market. The US dollar's value was in the dumps at that point. So this date, January 2018 rolls around, or the month of, and what happens? We see this blow off top and we see the crypto markets start to retrace. So from this little retracement, January 2018, down to about March 2019, we had a pretty significant retracement. And so we can see where March is here. March 2019 is right in here. And during this time, we saw the value of the US dollar take off while Bitcoin declined. And so then, then folks, from March of 2019 to March of 2020, that is kind of where Bitcoin uh, did one of these things where it kind of followed the dollar. As long as the dollar was kind of trading sideways, Bitcoin had some room to breathe for the most part until March 2020. And that's when the strength of the US dollar reached a tipping point. And then it really shredded downwards. And we can see that from March of 2020 up to April 1st, 2021 was really a heyday for Bitcoin. And what was going on? Well, the strength of the US dollar was going down because of the whole coronavirus situation, blah, 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 blah. And I'm seeing this pattern, um, happen over and over again. When the US dollar is strong, the crypto markets are weak, and vice versa. So I thought it would be interesting to now look at the US dollar, and we're going to just pull up a chart here. So we're going to type in the DXY, and we'll look at the US dollar currency index. And this time we're going to pull this up on the daily chart. The daily chart, folks, is one of my more favorite charts to really pull up. And what I'm seeing here, when we start to talk about Elliott wave theory is one of my more favorite things to look for. This perfect incline, this perfect impulse wave. This is exactly the kind of stuff I like to see. And so when we start to look at the DXY and the strength of the US dollar, this thing gives and it takes, and the cycle repeats. So what are we seeing here? Well, since February 2022, really since November 2022 or 2021, excuse me, we've seen the Bitcoin and the crypto markets really suffer. And this is from about here up to current day. So you guys can see that the US dollar has gained significant strength during this time. And what have we seen the crypto markets do? Since November of 2021, they have gone straight down. We have seen incredible retracements across the board. No matter what you're holding, folks, we are all in this together, I promise you. So here we have this incredible Elliott wave theory move to the upside. And when we see these types of moves to the upside, what I'm looking for is a simple retracement in the form of an ABC, or we can look for an ABCDE. So bear with me. We can look for something like this. It just depends on market situations. And one thing that I'm liking about this current situation and setup for the US dollar currency index, basically the strength of the dollar against select foreign currencies that are fairly strong, is that when we look at the Ichimoku cloud, price action is just simply too far away from the cloud. This thing needs to be pulled back, or it needs to trade sideways. I don't care what it does. But we've seen how Bitcoin reacts when the DXY, I don't know if I should say that, but when the DXY trades sideways, we can see that Bitcoin is not afraid to flourish. But we can see in past instances when price got too far away from this cloud here, we saw a nice retractor beam kind of pull it back. Other examples of this, it can be used to the downside and the upside. Price was too far away from the cloud here, too far away from the cloud here. I mean, you guys kind of get the drift. So when we start to look at cloud trading, this is one of my favorite tools to try to predict when reversals will happen, things of that nature. Since we're looking at this, let's just throw up a couple Fibonacci time sequence. I have not thrown one of these up yet, so we might have to really fine tune this. Okay, let's look at, I'm trying to get something to pop up right in this neck of the woods, preferentially right by June, somewhere in there. So let's just take a quick look at this. I want to see where the bottom is here. So that looks like that's the bottom right there. And we are just going to throw this time sequence up. Sometimes this works, sometimes it doesn't. But we are showing a time sequence right around June 13th, 2022. And I've been talking about how people should be on the lookout, especially for Bitcoin, around that July or that June 14th, June 13th date. So let's check out Bitcoin for a quick second because I want to show you guys the importance of this date. So we are going to go ahead and get rid of all this stuff. And then we'll just measure from right about up here down to maybe right in here. And we can see that in hindsight, it predicted a pretty nasty increase of volatility here. And we have something right around, June 26th, somewhere in that neighborhood. So could it be that we are going to be seeing a transition of power between the DXY and Bitcoin? Could possibly be. Let's look at Bitcoin at a super high level here, folks. We are going to pull up the Bitcoin investor tool. Now, this is a composition of two 750-day moving averages, and this is just a leveraged 5x version of this line here. So when we see that price dips below the 750-day moving average, this has been a great time to pick up crypto. At least we can see that in hindsight, right? Things could change tomorrow. This might reverse. It might not be true going forward, but in the past, it has been true. Pick up here, went on for a wild ride here. We saw the same thing happen 2019, somewhere in there. This was a great time to buy underneath this 750 day. Here's another time to buy during the coronavirus crash. And where are we right now when we look at the Bitcoin chart on the daily? We are well below this 750-day moving average, folks. So this is, in my opinion, based off this history, quite possibly the time to be buying. So I hope you guys enjoyed this video I did on the DXY. I hope you guys learned something and how important it is to really follow the correlation between this and the crypto markets. Again, if you like this video, smash that like button, and we'll see you guys all on the next video.